Welcome to the B.F. Anderson Technical Report for July the 7th. Steve Jobs' famous quote, "Focusing is about saying no." So with Steve Jobs, he was a serial inventor. He was constantly inventing things. That's what made Apple such a great company. But when he would focus, and his point was that you have to say no to a lot of things because you have to focus on the inventions that really made the most sense to him. Peter Lynch kind of hits on the same subject. He says, I think the secret is if you have a lot of stocks, some will do mediocre, some will do okay, and if one or two of them go up big time, you produce a fabulous result. So it's basically all about focus investing. You want to focus on a few things. You don't want to focus on hundreds of things. Here's an example of what I'm talking about. Now, we talked a little bit about FOMO, which is fear of missing out. So really, if you go back, and this is Amazon. We're looking at Amazon. Now, we first started to learn about Amazon in 1997, right after they went public. And you can see here that, the stock back in this period did rally. Now, the first thing you want to do on a graph, when you're looking at a graph, you want to draw a line across the top of the base. Why is that important? It's important because this is where the sellers dominated the buyers. So the buyers were coming in, then the sellers came in, dominated, stock pulled back, same thing. So you can see this is also called resistance. This is where the sellers are dominating. But all of a sudden, you will see a point where the buyers take over and it breaks out to the upside. You can see the massive amount of volume coming in, the buying volume. So this was the liftoff. This was the signal. So you had to be patient all during this period. It's very difficult to do, but it's a requirement. It's necessary. But the other thing to also understand here is that the market itself went into an uptrend, and then it broke out in this area here. However, as you can see by this vertical line, you had really plenty of time, several weeks, to make the decision to pull the trigger on Amazon. So let's look at one other. This is Tesla. Now, we started to learn about Tesla around 2010, 2011. However, this is 2013. You can see the stock was basically going nowhere. But then also notice the market was in an uptrend, and you got your initial buy signal here. So you would have probably maybe put 5% of your portfolio in the stock. And then here was your second buy signal that came in. And you can see that the market was in a fairly good uptrend, but it didn't really break out of this base until about, mid-April. But you could have been buying all in here. Now, the beauty of this entry point is that when you got into a correction, you were okay because your cost basis was fine. Did want to mention, the first half of this year has been difficult. This has been the worst first half since 1970. So basically, been difficult. Now, we mentioned how important it is that the market be in an uptrend. We're not in an uptrend. We are in a downtrend. This is a bear market. Here's the first phase, the second phase. Now we're in the third phase. Hopefully, we're starting to base out here a little bit. But remember the rule. The rule is we have to get above that lower moving average, and that lower moving average has to turn up. So if we look at the mid-cap stocks, same scenario, however, a little bit more white space in here. The New York Composite, same scenario. The lower moving average is definitely turning down, plenty of white space. Market's not in an uptrend. The small caps, this is measured by the S&P 600, same concept. The lower moving average is turning down, so we're in a downtrend in the small caps. S&P 500, same thing. You notice we don't really look at the Dow Jones Industrial Average. We just don't think it's a broad enough index. The point is that if the market's in a downtrend, the odds of making money in individual stocks or mutual funds or anything are very low. They're not good. Now, here's a growth fund we've been keeping an eye on. This is the IPO Renaissance Fund. This is the growthiest fund I can find, which is basically all companies that had gone public as IPOs within the last year. You can see it's somewhat basing out and actually back above that lower moving average. So the growth stocks look like they may be trying to lead again. Now here's the aggression index. Again, this is a ratio of the NASDAQ compared to the consumer staple stocks. Waterfall decline, we keep coming down, and then we'll get a small rally, and then it fails. And so the rule here is we need to get back above this lower moving average, and that lower moving average needs to turn up. However, we recently rallied up to the moving average, but then again failed. Now on the new lows, we're continuing to see too many new lows. We want to get these down to under 40 a day for an extended period of time. That's just not happening. On sentiment, we did get a little bit of a bounce in the sentiment readings of, people becoming more bullish, but it's still in very negative territory. But actually, this is somewhat of a buy signal. You're going to see this at market bottoms. You're not going to see this at market tops. Now on interest rates, which we're going to talk a little bit about the yield curve, but you can see here that the Treasury, the 10-year Treasury, did get up to 3.5. We pulled all the way back to 2.9. Price of oil really has turned down decisively, actually broke below 100. And the financial stocks, which I guess they're concerned about a recession, are not in an uptrend. They're in a downtrend. Now on trend strength, we're still at a trend strength of 0 on the NASDAQ. On S&P, we're at a trend strength of 0. And the volatility index continues to kind of waffle around the 30 area. To get a real shakeout of this market and maybe put that final low in, a reading of 40 would be what we're looking for. Now, I also wanted to mention the energy stocks, the oil stocks. Is really interesting. We all know that over the last couple of months, the energy stocks have been really, really dominating this market. But it's kind of a crazy industry because you're dealing with predicting a commodity price. And so as we see oil prices coming down, you can see what's happening to these energy stocks. This is the XLE, which is an ETF fund. It's barely holding that 200-day moving average. So be aware of that. The yield curve, this is as of Tuesday now. Back in April, we did slightly invert, but it looks like we're on the verge of inverting again. Now realize what we're looking at here is the 2-year Treasury bond compared to the 10-year Treasury bond. And an inversion historically has always indicated recession. Now here are some of the top 5 stocks. Now this is just our watch list. We're just watching these stocks because they have high momentum. So you can see here, this is biotechnology. We're seeing a lot of biotechnology opportunities right now. Here's a company called Scorpio Tankers. Now this is a oil tanker company. You can see breaking down along with, it has been really acting well, but then it's breaking down. It was down yesterday about 11%. Heavy volume on the downside. I would kind of avoid at this point. Ollie's Bargain Outlet. This is the only retail stock that's making our list, but you can see pretty powerful uptrend. I've been to their stores. They're kind of junky, but people seem to want to go there. Here's another biotech, Legend Biotech, very strong uptrend. You can see where the momentum on these stocks is really pretty strong. Here's DAKU New Energy. Now this is a company that's involved in polysilicon manufacturing in China. Broke out, moving sideways, continued just to watch. Now on a closing note, I just wanted to mention this quote by Peter Lynch. He says, you get recessions, you have stock market declines. If you don't understand that's going to happen, then you're not ready. You won't do well in the markets. So it's all about preserving your capital, your mental capital, so that when you go through these bear markets, you're able to deal with them and understand what's going on, and just realize at some point we will have a bull market. We just have to be ready. If you have any questions, please give me a call. Thank you very much.